welcome you to the risk management program. My name is Abhirup Mishra and I graduated from BIS Pilani in 2010. I currently work in the field of market risk management, and I also have a financial risk management charter. So like CFA, FRM is also one of the certifications that is prevalent in the industry. In this program, we would try to have a basic understanding of what risk management is. We also try to have some technical knowledge. For engineers, if you are engineers, this program is one of the risk management is one of the areas which is in finance which is closest to engineering, because it relies very heavily on the statistics concepts that you use. So I believe if you get started with this, you will really like working in this area. Here we have this calendar. The duration of the course is 4 weeks, and I divided the course based on different topics on a weekly basis. You will have 4 assignments for this course, and also after every alternate second week you will have a quiz. So in total we will have 2 quizzes, which would be on week 2 and on week 4, and you will have 4 assignments. So after every week, after the videos of every week, you will have to submit the assignment. So week 1 day 7, week 2 day 7, week 3 day 7, and week 4 day 7 would be the assignment submission dates. I'm sorry, this is a typo for week 4. On week 4 you will have assignment 4, and since this program is fairly quantitative in nature, so I would expect that you have some basic understanding of statistics. I will start every week at 12 p.m. IST. We will have I will start a webinar, and I will wait for 10 minutes. If you have any problems or you have any doubts with the content of this course, you can come to that webinar. If no one joins it, after 10 minutes I will close the webinar. Now I have divided the course content on a weekly basis, so let's go through the content. So here we have the content of this course. Well, actually risk management techniques are widely used in the financial industry because it really helps the major banks, the investment banks such as Goldman Sachs, HSBC, Nomura, and so on and so forth, in effectively managing their trading portfolio. So if you gain the basics of risk management, and if you decide to pursue a career in it, it's a pretty rewarding career, because it is very analytically challenging, and you will get to learn quite a fair bit. And considering the economic environment today, the regulatory environment, the number of jobs has also increased tremendously. So coming back to the roadmap of the course, for week 1 we will try to have a basic understanding of the basic financial instruments such as stocks, bonds, equities, and the basic techniques on valuation. So the first topic would be on the course video. You will have videos for all these topics, separate videos, which will be around 10 to 15 minutes in duration. I would advise you to go through them over and over again so that you can have a hang of the topic. So the first topic would be on basic financial terms and instruments. The second one would be trying to explain you the concept of time value of money. There would be a few problems that we would be solving. The third topic would be on DCF, and which is discounted cash flows and net present value. Next would be an introduction of equities and the related corporate actions which can happen on equities. And the last topic for week 1 would be an introduction to portfolio theory and correlations. Now this is a pretty important topic, this portfolio theory and correlations, because you will need to have a basic understanding of what statistics is to understand this properly. Then we will at the end of the week, so day 7 of week 1, as I mentioned in the calendar, we would have a webinar in which I try to solve any doubts that you may have. Then we come to week 2. Week 2 will focus on the financial products and derivatives. So the topics would be futures and forwards, options, and margin computations on future trades. We will try to have an understanding of interest rates and forward rates, swaps. Then we try to value bonds, try to understand what bonds are and how do we value them. And the topic will end with rating agencies. For third week we would have bond yields, which is actually yield to maturity, term structure of interest rates, DV01, perpetuity, and credit default swaps. And in the last week we will try to understand the basic tools which are there for risk management. So we try to understand the put call parity for options, the Greeks which are there for risk assessment. We try to have an understanding of what value of risk is and the related methods of estimating risk, such as delta normal method, historical simulation, and Monte Carlo simulation. So that's all from the course perspective, and I really look forward to working with you. Thank you.